overall, do you see overregulation or underregulation as a bigger risk in the digital asset markets in the next, say 5 to 10 years?
I think it's always a balance, right? So you want to encourage entrepreneurs, you want to encourage industry. You don't want to make it too hard or too expensive to enter into any business line.
I'm Sylvia Androletti, Senior Reporter at TFG.
I'm Chief Legal and Compliance Officer at Fireblocks.
Welcome to Trade Finance Talks, your go-to trade, treasury, and payments podcast. Brought to you by Trade Finance Global.
Hello and welcome to another episode of Trade Finance Talks. I'm Sylvia Androletti, Senior Reporter at TFG. Today we're at Szabo's 2025 in Frankfurt, Germany, and we're talking to Jason Algrant, Chief Legal and Compliance Officer at Fireblocks. Jason, why don't you start by introducing yourself and telling us what brings you here at Szabo?
I'm Chief Legal and Compliance Officer at Fireblocks. I've been with Fireblocks since about 2020. Fireblocks provides a software service that enables institutions to do a number of things with digital assets, including execute payments rails, custody, and issue stablecoins if they want to. So my background is actually traditionally in financial services. So I come from the finance space and I've come to the digital asset space. And we're here at Szabo today really for the attendees, right? I mean, it's an amazing gathering, both on the tech side as well as the financial institution side. We're a big believer in the future of financial institutions in this space. So we've come to meet folks who are interested in getting to know us and our product and, having chats about digital assets.
All right, thank you so much. How do you think this year's Genius Act passed in the US regulating stablecoins affect the digital assets industry worldwide?
I honestly think what's happened in the US is hugely consequential, not only for the US, but to your question, to what's going on worldwide. I'll take you on a short journey to kind of illustrate how I've come to that conclusion, right? So traditionally, the United States, I think it's fair to say, has played a leadership on the global stage, and that's including in the realm of policy. So I was sitting down with commissioners from a Securities and Exchange Commission, an American country, they don't speak English, and they're explaining to me that they have this rule in place called the Howey test. I'm shocked because the Howey test is actually a judicially created interpretation of our Securities Act that helps courts determine what a securities is, right? The point I'm making is that when this commission thought, how do we implement a securities regime that's globally compliant and, platinum plated, they looked to the United States, and they didn't just look to the United States and do something similar. They called it the Howey test. For the last 5 years, we've been in a departure from what I would describe as that global norm, right? The United States has been hostile to digital assets. It's abdicated responsibility for their regulation. But we are now going to return to that story that I told you, I think, at the beginning, right? So with the Genius Act, the United States has announced its intention to be a leader in the space. We have legislation, and I do believe it will become a model for countries within its sphere of influence that want to enter the digital asset space. And I think it'll also be something other countries all around the world are looking at very closely, just from a competitive standpoint, if nothing else.
Lovely, thank you so much. And speaking of regulation, so lots of people are talking about regulatory arbitrage, right? Can you tell us a little bit, first about what that is for our listeners? Also, do you think that overall regulation around the world is going to converge together, or is it going to remain fragmented to kind of enable regulatory arbitrage in?
I would agree that right now we are in a stage of fragmentation, but that's because we are building something globally, and everyone is building kind of on their own. That's a function of what I said with the United States on the sidelines, right? Europe moved. We've seen other countries move to regulate digital assets. So we have ended up in a place of fragmentation. I don't think we will see that continue as the status quo. Again, coming from financial services, I look back to the crisis of 08-09. Coming out of the crisis of 08-09, we had at the G20 level, principled agreement about what we should do to reform the financial system. We then had the passage of law. In the United States, that law was called the Dodd-Frank Act. In Europe, it was called the MiFIDs, MiFID 1 and MiFID 2. We had different versions of this all around the world. And then immediately following the completion of that exercise, we saw something else that was extraordinary, which was we saw everyone come together to start talking about how do we harmonize the rules across the borders. So I think we're in that phase right now. We're adopting things and we're all doing it on our own. We don't have that principled agreement like we did after the last crisis. So we are seeing this period of fragmentation, but then I think there will be a big project to make sure things are harmonized and that we don't see regulatory arbitrage. And of course, regulatory arbitrage is the practice of attempting to receive more favorable regulatory treatment in one jurisdiction than you might in another.
So speaking of fragmentation, what a lot of cryptocurrency skeptics talk about is that, if we allow stablecoins or cryptocurrencies to become common, then every bank or every shop is going to ask for its own kind of special stablecoin, and then the world is going to become much more fragmented than it is now. What do you think regulation, or what do you think, stablecoin company for providers like Fireblocks? What do you think they can do to prevent that kind of worst case scenario of fragmentation?
Hopefully we're creating a new market. It's a new market for a new payments instrument. And you want to see, I think, a lot of consumer choice and a vibrant ecosystem. What I think is interesting about stablecoins, right, is by definition, they're kind of an extremely boring product, right? And by definition, they should be non-differentiatable. They should be interoperable. So, a stablecoin is backed by a certain reserve requirement. It has an issuer who has certain regulatory requirements of its own, right? So again, from a product level, when you buy X stablecoin over here, it should be almost exactly the same in many respects to Y stablecoin over here. It's not that we're trending towards fragmentation in this market. It's actually, how do we get competition, right? Because I've just described to you what I think is a very boring product. So what makes it exciting? What makes it exciting for consumers as well as issuers to actually want to do this as a commercial project? And I think we'll see two things happen, right? I think at the issuer level, we'll start to see consumer preference and also market preference expressed. So I'll just give you an example. Take regional bank in the United States. It operates in the Midwest only, right? And it wants to issue a stablecoin. That's terrific. But then it's going to go up into the market and it's going to start competing against someone else. So let's take JP Morgan, right? And then JP Morgan has one of the largest balance sheets in the world, presumably one of the healthiest balance sheets in the world. And so now we have JP Morgan coin in the market and we have a regional bank coin in the market. And I think once you get to secondary trading in these assets, right, I think the market will start to look at these and say, I wonder if the JP Morgan coin isn't the safer coin in some ways than the regional bank coin. So I think we could start to get those sort of fine-grained distinctions. And the other thing, which I think is really exciting, so I'm not sure that it's widely known, but for stablecoins issued in the United States, it's actually prohibited to offer interest. So the stablecoin itself will not an interest-bearing instrument. I would have thought would be one of the primary incentives to holding a stablecoin, but that's prohibited by law. What's not prohibited by law, and what I think will be really interesting, is the creation of incentive programs around the stablecoin, right? So you might think of, instead of interest, right, if you go to your bank and you are issued stablecoins and you use them, maybe you earn rewards points. The same way that when I use my American Express card, I'm earning rewards points that I can then use for X, Y, or Z thing. I'm really interested, how do we develop competition in this market? And I'm actually far less concerned about crazy amounts of fragmentation.
Thank you so much. And overall, do you see overregulation or underregulation as a bigger risk in the digital assets markets in the next, say 5 to 10 years?
I think it's always a balance, right? So you want to encourage entrepreneurs, you want to encourage industry. You don't want to make it too hard or too expensive to enter into any business line. We've always believed at Fireblocks that regulation is critical to creating the kind of institutional ecosystem we want. Institutions don't want to play in an unregulated space, particularly with something like a digital asset. Regulation is a baseline, right? It's the thing that creates a level playing field, creates consumer protections, all these things that you absolutely want in the market. Do you take a step further, right? I think it depends on what kind of risks you're identifying in the marketplace. I feel really good about where we came out with the Stablecoin Act. It appropriately regulates issuers, appropriately sets reserve requirements. And like I said, we'll now see what the market does with that.
Hey, enjoying the episode? Tap follow for more. Done? Let's get back to it.
Do you think, besides regulation, is there anything else that stablecoin and digital assets companies need from government to grow in the next few years?
I have a theory, which is that stablecoins are much bigger than stablecoins, or the Genius Act is much bigger than stablecoins. So stablecoins are kind of the headline for why you might enter into this business line, right? It also obscures what it takes to do this successfully, right? And so I'm thinking about things like custody, like infrastructure, like payments rails, the ability to send and receive securely between an issuer and its downstream customers, right? Merchants' ability to be able to receive these coins and then redeem them or spend them. So to do that, you have to put in place a secure digital asset infrastructure. This is like what we think about all day at Fireblocks. I'd like to see government step in is on the question of custody. So the custody market is a really fascinating place in digital assets right now, but I think we're still struggling to answer a very, very basic question. And that is, what does good look like in digital asset custody? Right now, we have a range of answers. And if you ask a regulator over here, they will tell you, put it in cold storage in a hardware device. If you ask Fireblocks, we'll say, put it in the cloud with multi-factor security, right? So what we need to do is come together and basically identify all of the best ideas that we've had. And we need to eliminate all the ideas that were involved in the hacks that we've seen. And where we need the government to help is basically like we need ultimately then a sort of standard setting body. One way to do it would be through an industry association that kind of has the blessing of a government. I don't know that we're there as an industry to be able to do that. So we could look to something called NIST that sets technical standards in the United States. could look to the banking regulators, the OCC, the FDIC, basically to adopt rules and say, okay, banks, if you're going to engage in this stablecoin activity, we want to make sure you have implemented a security solution, a custody solution that has X, Y, and Z features.
Absolutely. And moving on from kind of US policy, I'm wondering what you think about the UK's new policy proposal, which would involve resolve disputes that involve DLT currencies without identifying a single applicable jurisdiction. So from my understanding, this would mean that there's a dispute between two UK companies that involves DLT. The dispute wouldn't be resolved using UK law, because basically what the government is saying is that because it's a DLT, it's not like it doesn't fall under the purview of the UK government.
Candidly, I'm not very well versed in the details of the proposal. What I will say is that it does sound a little bit like what we call in the United States, like a special resolution regime. This is obviously not a insolvency regime, but a dispute resolution, as you said. At a very high level, and again, we talked about the value of regulation. I think anything that brings clarity and certainty to market participants, right? And again, we need to start at the retail level and make sure the retail user is protected first and foremost, but then also at the institutional level. I think that's a good thing. So if you're telling me the UK is proposing to create basically a system for the resolution of disputes that creates clarity, perhaps takes it out of home country law for whatever reason, whatever challenge they're looking at there, I think that's a great thing.
Absolutely. And can I ask a question that's not in the list? I was wondering, it's kind of funny that you say that stablecoin kind of obscures everything that's actually in digital asset. What is the thing that kind of gets you most excited about digital assets in the next few years? What's the kind of new technology that we're not talking about, but we should be talking about?
I am really passionate about custody. I know that sounds insane to anyone. Custody was, in the traditional financial space, the most boring thing that there was. It was basically taking a gold bar and putting it into a vault and forgetting about it, right? In the digital asset space, your wallet is your point of departure to and from every place that you want to be in the ecosystem. So the wallet has a central role, not just in the security of the asset, but also what you do with the asset. And so I think what happens with custody, the way it evolves, I think we're going to see these custody platforms really become central players in terms of being the middle point in the entire ecosystem. I'm very excited to see how this continues to evolve. And of course, we'll see new retail solutions and all that, and that'll be very exciting. The other thing that I like, we start off with my title, I also wear a compliance hat. One of the things that's been very challenging for digital asset market participants is compliance with AML CFTC rules. And I don't think that's a lack of enthusiasm or desire on the part of the industry. We all agree that terrorist financing is very bad, and we all want to see that stop. So the question has become, it's not just how do we make it easier, but how do we really rethink the whole system that we've created? And so a lot of people in the digital asset space have been thinking really deeply about how you might go about creating a whole new way of thinking about controlling for AML CFTC. One of the ways you possibly could do it is what's called digital identity, but it's a way of bringing an individual's identity into the internet, into an internet space, allowing it to travel with them either through their wallet, through their assets, or things like that. But what it does, it basically opens up access to an entire range of services, et cetera, that you might find very challenging to access today just because of the difficulty of complying with the AML CFTC laws. People have been talking about this for a long time. I don't know whether it will go anywhere, but I think a lot of the ideas are really interesting. That's one thing I'm excited about.
It's interesting that you talk about anti-terrorism financing, because my next question was going to be about kind of cybersecurity concerns around cryptocurrencies. So a lot of people are scared that cryptocurrencies, because they're not as traceable as, say, a bank transfer, that they could be used to commit crimes or launder money or finance terrorism. What do you think digital assets infrastructure firms or crypto issuers can do to kind of fight against those allegations or assuage those fears?
I think as an industry, we have an obligation to do a much better job. And I think there are two aspects to it. I think one is actually doing a better job, but then I think the other aspect to it is doing a better job of communicating what our position is on it. So in my firm, we're founded by folks who fought terrorists for a living for a while. This is in the DNA of my company. So we take these issues very seriously. In terms of the messaging, right, about traceability and its use in illicit finance or crime. This is, of course, the same for cash. This is obvious. Nobody seriously discusses banning cash, and yet the amount of cash payments going to criminals and terrorist organizations is much greater than cryptocurrency. And as to the traceability, most of the stuff is moved on a public blockchain. We are frequently just ourselves within the building tracing assets for various reasons. So if there's a hack or something, a customer might be involved, we will actually help them hunt down those assets. And the problem isn't that you can't trace it across the blockchain. It might end up at a wallet address. and you don't know the owner of that wallet address, the trail kind of goes dry. Or it might end up at a wallet address and you know the owner of the wallet address and that person is in North Korea. And so you have no enforcement recourse against that person. So I think we need to do a better job of explaining what tools we have available to us to help meet the counterterrorist objectives today. And then, like I said, we need to do better. Blockchain is a technology. All of this is a technology. Technology is only as good as the use you make of it, right? So there are all sorts of technologies that can be used for violent purposes, criminal purposes, a kitchen knife, right, for example. But you can also make really good use of it as well. And so that's what I think we need to really highlight about blockchain technology. We need to be part of the solution. On Fireblocks, for example, we offer all sorts of compliance solutions. So we have Elliptic, Chainalysis, a company called Nota Bene that does travel rule compliance. These are all service providers that are plugged into our platform. And that's because our customers want and need their services so that they can comply with the law. I think that's a perfect note to end on. We all want to make sure we're in compliance with the law. We need to do more as an industry to leverage the technology to show how we can do that. And we need to do a better job of communicating.
Thank you so much. It was lovely to talk to you.
Thank you, Sylvia.